Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about the current state of Bitcoin and Bitcoin miners. As you all know, Bitcoin closed out last week with a technical breakout followed by some parabolic price action, which obviously catalyzed some very impressive upside for Bitcoin mining stocks and crypto equities across the board. Riot, Mara, bitfarms, all seeing double-digit percentage gains to close out the week, which is definitely fueling some optimism for the bulls. And as much as I love to see the OGs seeing this type of price action, I'm still personally not quite sold on the fact that this is a macro reversal to the upside. So I want to do my best to explain from both a technical and fundamental perspective why that is and what I'm personally expecting in the trading week ahead. Okay, so let's get into it, you guys. We'll quickly go over the topics we'll be discussing. Gonna keep it pretty short and sweet today. Only gonna be looking at Bitcoin and Riot on the charts, talking some technicals, but between these analysis. So I'll kick it off with Bitcoin, jump straight into Bitcoin on the charts. I'll let you guys know what I'm seeing here and price targets, certain levels that I'm targeting, which will, in my mind, dictate whether we see more medium-term upside or downside. Between that and the Riot Blockchain analysis, I do want to read over the intro to the newsletter that I sent out on Friday because this covers the macro. And right now, you guys, the macro is very important. The jobs reports is coming. Inflation numbers are coming out this week. In the exclusive Sunday Stock Watch I record after this, I'm actually going to be covering this article. Fresh inflation data could fuel further market volatility in the week ahead. So there's a lot of macro factors at play right now, you guys. And between these analyses, you can just feel free, if you guys just want to see the price targets and whatnot, you can skip over that. But I personally feel, and I mean, it's objectively true that macro is at the base of all trading, at least in my mind, at least swing trading, the type of trading style that I do. So macro is very important. We'll tie in some fundamentals between the Bitcoin and Riot analysis. And yeah, that's pretty much the breakdown of the video, all right? So before we do, it means a lot if you guys like the video. As always, let me know in the comments down below what you guys are thinking. If you're bullish, bearish on Bitcoin as we move over the remainder of the week. That goes for crypto equities as well. And yeah, subscribe to the channel if you're not for some reason. Bitcoin, again, on Friday, seeing a very, very impressive breakout. Maybe Thursday night, where I guess depending on which time zone you're in. But Bitcoin seeing some amazing price action, finally breaking out of this very, very strong descending channel. Some very, very significant resistance that has been in place since Bitcoin's all-time high, just under $70,000 on November 9th. Initial touch point, boom, boom, creating the overall line of resistance on the downtrend, which Bitcoin, for the first time, again, in months, did finally break through on February 4th. So as soon as this was broken, that's when we see Bitcoin really go parabolic right here. Okay, white line, remember, this white line is resistance, tested it many times, but finally, Bitcoin, the king, was able to break through it, see some parabolic price action. It's got a price range on that from the point of breakout to the peak right there is a 10% jump as soon as we saw that breakout. So again, you guys, every trader in the world who's trading Bitcoin was eyeballing that line of resistance. That's why we see this crazy volume spike as soon as that resistance was broken. And now we've kind of just plateaued. So there's two levels. I mean, bullish, bearish, for the reasons that we get into right after this from a fundamental perspective. I personally still lean bearish. I do think, like, this over here, we straight up got short-term kind of bear trapped out. So you see this this short-term series of higher highs and higher lows broken with this lower low, I guess, right here to break the short-term trend of higher highs and higher lows. But boom, bear trap ended up breaking out and seeing more than a 10% jump, like 15% jump actually from these lows over here from that bear trap. But regardless, if you guys traded this, if you guys caught this one, congrats to you guys. If you guys made some money on this flip, that's awesome. But again, I do still lean bearish, and the reason for that is primarily the fundamentals at play right now. But from a technical perspective, we are still technically setting in a lower high on the macro series of lower highs and lower lows, once again, since the all-time high back in November. Okay, so again, lower highs, lower lows, high, low, lower high, lower low, lower high, kind of stair stepping down, but this is definitely still a lower high right here because this is classified, this green line I have drawn right here is classified as the previous lower high. So as long as we are below 43,500, just play it safe, 43.5, I am still bearish and I do still think more downside is to come. If we can break to play it super safe, if Bitcoin can see 45,000, that would make me extremely optimistic in the fact that maybe we do see more medium to long-term upside as we progress through spring, maybe even into summer of 2022. But again, with the macros at play, Fed's raising rates. We'll get into that right after this. I don't think that's going to be the case, but I do think that it's awesome that we're seeing some short-term upside. And hey, if we do break $44,000, 45 to be super conservative. If we can see if Bitcoin can see 45K, then I will definitely be restructuring my perspective on Bitcoin, at least on the charts. Okay, so that's the upside target. I do want to see this lower high broken, and that's the first thing I personally want to see to flip bullish. Now, what would I need to see to flip bearish? In my mind, it's pretty damn likely that Bitcoin comes down here to at least test to settle low. We went straight parabolic. We're going sideways. It seems like no one really wants to buy right now, but hey, you could make the same argument that no one really wants to sell. That said, 4-hour Stokes are curling to the downside at the time of recording. It is currently 11:30 a.m. Hawaii time on Sunday. So we'll see what happens here. But 4-hour Stokes are curling to the downside, losing volume. It's a weekend, it's Sunday, so that's not surprising. But I do think Bitcoin will come down to the very least to about 39.3 to retest these previous highs over here. Maybe down here, maybe down to, we'll just call it like $39,000 to retest this previous high here before that little bear trap. Just to set maybe on the short term a new higher low. I'm sorry, gets confusing with all those lower highs and higher lows, etc., etc. But I do think we come down to at least 39K in the short term to once again set in a higher low on what could be a new short to medium term uptrend. But if we were to break below this initial high set right here, the break of the line of resistance, which was around $38,000. So if Bitcoin does fall below 38K, that's where I'll personally flip bearish, and I do think we will reclaim this descending channel if we fall below super conservatively, like $37,000. I mean, super conservatively, I guess we would need to fall back below here, which would also bring us back into this descending channel below that white line once again. Previous resistance could become new support, so maybe Bitcoin does come double bottom, come back down to like 36.5 to retest this. But if we do, like straight up, I think more downside short term is ahead if we break 38, and if we break back into this descending channel again below this new support, previous resistance, if we do reclaim this previous descending channel, I think more downside is, if we break below $36,000, it's inevitable to me, personally at least, that 28 to 30K is going to be in the cards by the end of the month, which I personally still lean that way. Again, been wrong plenty of times, you guys know that, but that's just my belief there. Okay, so let's go over some fundamentals. Okay, I'll read through this and I'll just kind of I'll just chime in or expand on any of these thoughts if I feel necessary. Happy Friday. Happy Sunday now. Happy Sunday, fam. Both the equity and crypto markets closed out last week on a very strong note following Bitcoin's technical breakout and Amazon's impressive earnings report. If you guys haven't watched the video on where I touched on big tech earnings that occurred last week and kind of just my thoughts there and the lack of rationale that's occurring in the markets right now, go check that out. It's doing super poorly, so I don't know if many of you care about that. But that one, I get super macro. This one, I'm going to go pretty shallow compared to that one. Anyway, the big news of the day in macro is the January jobs report that was just released. And let me tell you, jobs are hot. I'll attach the summary of the report from an article I read earlier below. Surprisingly large, this is just CNBC Pro. A surprisingly large increase in jobs and higher than expected wage gains in January are raising concerns that the Federal Reserve could move faster to boost interest rates, economists say. The economy added a stunning 467K jobs in the month, and revisions added 709,000 more jobs to November and December payrolls. Average hourly wages jumped to 0.7% or 5.7% over the last year, which is definitely, keeping pretty in line, pretty in check with inflation. Again, remember those numbers. We'll cover this again in the Private Sunday Stock Watch I record after this. But those numbers are going to be coming out this Friday. Just stay tuned for that. You guys stay on your toes. The labor market is not just strong, it's on fire, said Chris Rupke, chief economist at Forward Bonds. It's really going to intensify those inflation flames. So I love to hear this from an economic perspective, but so does the Federal Reserve. This is raising major concerns that the Fed will use this knowledge to raise rates even faster than anticipated. Raising rates equals good for the dollar and bad for the markets, okay? So I did then attach a chart of the DXY, or the US dollar index. This is the US dollar trading against a basket of international fiat currencies, pretty much just weighing the strength of the global reserve currency, which is the US dollar. Right now, if you look at the S&P, I'll cover that. Of course, the S&P and NASDAQ in the Sunday Stock Watch right after this. But right now, S&P 500, NASDAQ, the kingpins of the equity markets. Pretty much they sum up the entirety of the equity markets, growth equity markets. Those two are looking bearish trend. Those two are facing very, very significant resistance at the time of recording going into this new trading week. While the dollar, this was on Friday, but it still looks the same. It's actually bouncing up right now, and it actually looks more bullish than it did right here, because the dollar is basing out on very, very significant support. Okay, so very obvious ascending channel dating all the way back to like March, April of last year. So solid ascending channel right here. Dollar just based out again at the time of recording. We don't need to look at it right now. It's curling to the upside right now, looking like it is successfully basing out, setting that support, setting a new higher low, and I do think new higher highs in order, and I do think the line of resistance on this ascending channel will be tested. And again, raising rates, good for dollar, bad for markets, especially inflation hedges, the king of which is, in my opinion, Bitcoin. Okay, so Bitcoin, again, very, very exciting. Love to see that technical breakout. Super optimistic for the bulls. I know all the hodlers of Bitcoin are big spenders this weekend. And again, I'll never not hold a decent size position in Bitcoin. I shouldn't say, moderate position size in Bitcoin, regardless of the fact of whether I'm trying to swing trade and optimize my cost per BTC. But still looking good, you guys. I shouldn't say still looking good. Still looking good in terms of my beliefs over the past couple of weeks in terms of skewing bearish, okay? So short term, love to see it. If you guys are stoked about the short term upside, that's awesome. But just be aware that the macro is still sketchy right now. And again, we're not out of the woods yet, okay? So let's close it out with Riot Blockchain on the charts. This is super simple, you guys. Keep in mind, ultimately, the price action of Bitcoin miners, Riot bitfarms, even like Coinbase, when you get into Canaan and stuff, MicroStrategy obviously are going to be extremely, extremely tied to the price action of Bitcoin. So if Bitcoin's doing good and the equity markets are doing good, again, the S&P and NASDAQ actually bounced on Friday following Amazon's earnings. So when Bitcoin and the NASDAQ, primarily the NASDAQ because it's more tech weighted, are doing good, that's the perfect formula for Riot, for Bitcoin miners, for plays like Coinbase and MicroStrategy to do well as well. So Bitcoin and the markets doing good. These are going to do good, but exponentially good because they're smaller cap and they're just more exciting, volatile plays. They're more high beta plays. But Bitcoin and the equity markets, primarily, once again, the NASDAQ doing bad, these are going to do the same thing, but vice versa. Okay, so exponentially worse if Bitcoin and equities are doing bad. From a technical perspective, Riot, this is a very, very obvious read, and maybe we do see this in the short term. Again, in the case of kick off the week with some strength, but I don't think it'll last long personally. Riot still is below a very, very significant point of resistance, and at some point this does need to be tested. What's the end of next? The end of this week is going to be February 11th. So worst case scenario, by February 11th, I do think it's likely that Riot will test this. That said, this is still kind of like the lower high right here. This is technically the base of that previous, lower low, I guess. Kind of lower low, you could say that. It's weird looking right there. It's really just a stair step to the downside. But I do think it's possible that Riot does come up. Again, remember, this is a long-term line of resistance from those two touch points, November, a little after that. And it's still not looking good. So there is a ceiling right here where Riot did gap down a little bit. Again, that's the low on the previous lower low, which will act as the new ceiling for this lower high. There is some resistance around 750. And again, in the case that Bitcoin's looking good going into the new trading week, in the case that NASDAQ and the S&P pop on Monday, I think it's very possible that Riot does see some upside, maybe even coming up to like 1950 to test the overall line of resistance. But again, after that, just because I do think that over the course of next week, even if we do see short-term upside heading into this trading week, I do think that Wednesday, Thursday, Friday are going to start to taper off. So yeah, that's just my 2 cents, you guys. Again, I've been wrong plenty of times. You guys know that. But again, I still, although I think it's very possible we do still see maybe some more short-term upside, talking like a few sessions, I do still think that over the coming week, 2 weeks, close out the month of February, that we will start to see a lot more red, okay? So that's my 2 cents, you guys. Again, let me know in the comments down below what you think of all this. And yeah, just how you're personally attacking the market right now. You guys know I'm heavily hedged. Again, if you guys want a complete breakdown of my entire personal portfolio, you want to know how I'm trading through the trading week, I'm gonna be gone. I'm taking my parents to the Super Bowl this Wednesday, and I'm gonna be gone for a week, taking my parents. I mean, Dad's hometown is LA. The LA Rams are freaking playing in SoFi. You couldn't write this stuff, but super pumped to take them. I'm super blessed to be able to do that. That said, I won't be recording many videos while I'm there. I'll try to squeeze some in my office up at our LA house. But yeah, just remember that I do write the newsletter every morning, regardless of whether or not I'm making a video that day. If you want one of these bad boys in your email inbox every trading day during market hours, if you want a complete breakdown of my entire personal portfolio that I do update every trading day as well, that has every single position of my portfolio. You want to know when I'm buying dips, you want to know when I'm selling rips, and if you do want the exclusive Sunday stock watch that I'm going to be recording right after this, again, you guys, $15 a month, $40 for every 3 months. Really means a lot if you check it out. First link down below. And yeah, appreciate you supporting me if that's the case. If not, no worries at all. Appreciate you watching. And again, stay on your toes, you guys. This market is a roller coaster. But hey, this market's exciting at the same time. So until next time, you guys, always remember, take action, make waves. Peace.